This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody. Yes, indeed. We are across Bloomberg platforms. Carol Massar, Tim Stenivek, live in Bloomberg headquarters in New York City. And gotta say, wacky day bouncing around here on those major equity averages. However, just a hair higher on the S&P 500. Dow's up, NASDAQ 100, a gain of 0.9%. But I was kind of struck. I kept listening to Paul Sweeney this morning on Bloomberg Intelligence, and he kept saying, yeah, NASDAQ 100 is up, but the NASDAQ, not so much.
Well, look, both of them have the Mag 7.
Yes.
Both of them have Apple. Apple is just dragging down every major index right now, responsible for 113 points to the downside for the NASDAQ 100 right now. But as Carol mentioned, that is being outweighed by some other companies, including Micron, SanDisk, Applied Materials, Lam Research, and Qualcomm.
I got to say, we're a broken record. Philadelphia Semiconductor Index, folks, 26 of the 30 names are higher in today's session. That average, or that index, up another 4% in today's session, and it is up about 97% year to date. So, what?
Oh, I mean, I mentioned Qualcomm. We got Ed Ludlow in just a minute to give us an idea of what the Qualcomm CEO told us. Also, what you need to know about Micron's blowout report.
You know what I know?
What do you know?
It's all about memory.
Okay. This is like the John Author's hindsight capital over here. Carol just reminding everybody.
Hey, everybody.
Bought those stocks.
I have a little clue for you. Hey, we're also going to get into the challenge for investors, not only understanding that AI is consequential, but building frameworks precise enough to act on. That's what it's all about. There's news, and then actually figuring out how, as an investor, to make a move. We're going to talk to Jitanya Kanharndri. She is Bloomberg, Morgan Stanley Investment Management over there, and so we're going to see what she has to say. She has a whole report out.
Well, speaking of reports out, we're also speaking with Nick Nafusi, Global Head of Retirement Solutions and Head of LifePath over at BlackRock, on being ready for retirement. He's got the latest report about how ready are we as a cohort. And remember, LifePath is the set it and forget it.
Yep.
As you get closer to retirement,
right,
your asset allocation mix changes, more bonds, less stocks.
Exactly. I'm curious about the flows that they see. There's a lot that's under his umbrella. We're also going to talk the World Cup and global soccer. JT Batson, CEO and Secretary General of the U.S. Soccer Federation, is going to be with us.
Maybe they should call it football.
Let's get a check on the market trade. All right, let's toss things over to Amy Morris, who would never call it soccer. Or would you?
What?
No, I don't know. I know you got a lot of other more important things.
She's like,
to
I'm
keep.
glad I'm hundreds of miles away from you two.
I'm typing like a mad woman trying to get these numbers in for you, Carol. A ship earlier today, about a little more than an hour ago, was hit by an unknown projectile in the Strait of Hormuz. Now, this happened just hours after several freighters turned around while they were attempting to cross the strait. This is all moving oil prices higher once again. WTI crude now up more than 2%, around $72 a barrel. Brent crude has topped $75 a barrel. It's up about 2%. Plus, there's this renewed wave of tech volatility that is gripping Wall Street. We check those markets for you all day long here at Bloomberg. The S&P 500 is down 0.1%. NASDAQ down 0.6%. The Dow is up about 0.1%. The 10-year Treasury yield at 4.39% and the 2-year yield at 4.12%. But look at Micron Technology. Those shares up 18% after the chip maker gave a stronger outlook than expected. Carol mentioned it earlier. Yep, all about memory. The Supreme Court has shielded Bayer from tens of thousands of claims that its Roundup herbicide should have been labeled as a cancer risk. That's a ruling that'll help end a decade-long flood of lawsuits that have already cost Bayer more than $10 billion. Shares up 19%. The Federal Reserve's preferred inflation gauge rose to a new 3-year high in May because of gas prices in part. PCE rose 4.1% last month from a year ago. That's the most since April of 2023. But if you take out food and energy, prices were 3.4% higher from last year. The economy grew at an annualized 2.1% pace in the first quarter, faster than previously estimated. Weekly jobless claims fell 12,000 last week to 215,000, another sign of a stable job market. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek.
All right, Amy Morris, always on it. She's in for Charlie Pellet on this Thursday. We just want to quick rehash that headline that crossed. Again, this is coming from the Wall Street Journal that Iran attacked a Singapore flagship in the Strait of Hormuz, happening today. The Iran attack damaged the ship's bridge, but there were no casualties. Again, just a few headlines, but as Amy pointed out, looking at WTI crude futures, Tim, they're pretty much at their highs of this session now. They're up about 2.3% in the trade. So we are seeing certainly some pressure. Keep in mind, WTI today was down as much as 2%. So we've seen more than a 4.5% swing, and we're at our highs right now.
We're at our highs, but we're still very close to those levels that we saw just leading into the war in February. Not quite below them as we were yesterday and earlier in the session, but moving not in the right direction right now, but hovering around that, $70 a barrel.
And just a reminder that not all is complete or done when it comes to the U.S. war.
There's still
with
U.S. assets in the region, and I don't think people will think it's complete until those assets are gone.
All right, so we're going to keep an eye on that and bring you any more headlines as they are known. In the meantime, we got to go to what is really a dominant story for us. The world seems to be giddy again for semiconductors, especially memory chips. SK Hynix and Micron Technology have solidified the memory chip market as the hottest part of the AI industry with back-to-back announcements. Micron delivering sales and profit forecasts that shattered analyst estimates. Its shares are soaring as we speak. SK Hynix disclosed plans, Tim, for a blockbuster stock listing in the U.S. There's a lot going on.
Also on the move, Qualcomm shares jumping. This after the company forecast annual sales of more than $15 billion from AI components and data centers by fiscal 2029. Chief Executive Officer Cristiano Amon said the use of AI is shifting to agents, specialist models that are good for specific sets of tasks, providing an opening for the type of tech his company provides. And earlier, Bloomberg Tech co-host Ed Ludlow, along with Romain Bostic, caught up with Qualcomm CEO Cristiano Amon.
This is a different conversation. It's a different data center right now. This is about AI. But it's a valid question, right? So I will give you the same answer that I gave when we entered the automotive business, when we entered the industrial business, and everything that we have been doing to diversify the company. Those are fast-moving markets now, changing with technology. So where we really focus is not what the data center is doing today, but what the data center is going to be doing tomorrow. The data center is now moving to agentic. That's why you see CPU companies on the rise. You see demand on the rise.
Good stuff there. Cristiano Amon, Qualcomm CEO, there with Romain Bostic, and of course the host of Bloomberg Tech, Ed Ludlow, who kindly is joining us right now from our bureau in San Francisco. Do you want to point out Qualcomm shares are up about 7%. They're off their highs of the session. Micron, we're going to get to that too. It's up about 17.5%. I think it's at an all-time high as we speak. Whoa, Ed Ludlow, where do we begin? Talk to us.
Yeah, it's quite a lot.
What do you think? Let's talk about Qualcomm. We just heard a snippet of the CEO. What's stood out for you?
Credit where credit's due, right? Qualcomm is the world's biggest provider of smartphone processors, a market that is not doing great right now. And they have made this entry into data centers. And what you heard from Cristiano Amon there was the answer to the question, didn't you already give up on data centers? And secondly, if you look at what they announced, Wall Street's clearly cheering what they've said about the future financial opportunity, but they're a little bit late to the game. Because these CPUs come online in 2028. Their accelerators, their custom AI chips for running inference workloads aren't here yet. And the problem is they're in this environment where NVIDIA absolutely dominates the market, and whatever's left, AMD comes up and gets the rest. But both of those companies have a new chip every single year. Qualcomm's chips are 2 or 3 years away. But he was honest about that. Like the market opportunity is absolutely ginormous, and they are very confident they're going after a very specific bit of it because their chips are nothing to be sniffed at. They're like highly performing, very efficient chips on a $1 per token basis or a $1 per kilowatt basis.
Ed, you mentioned AMD, you mentioned NVIDIA. What about Intel, Broadcom, Google, Amazon?
Yeah.
Can we throw Cerebras in there?
Yeah, you absolutely can. I mean, the field is becoming more crowded in terms of the number of players, but based on current data, which you can say is just simply sales or its deployments, NVIDIA has a technical monopoly, which at Bloomberg, we believe a technical monopoly is more than 70% of a market. So, the opportunity's there, and clearly based on the share performance, and also like what they said, right? Like they're going to do $5 billion of data center sales next year, fiscal or calendar 27, and that will go up to 15 by 2029. That shows progress for a company that has historically not been in that market.
All right. So, Micron?
Yeah.
Let's talk Micron.
Yeah.
It was a thing that leading up to yesterday's results after the closing bell, every market guest that we had on said this is going to be really important. So what was so important about the results that has this stock, I think, at an all-time high as we speak?
Yeah, it's not about beating the expectations of the street. Micron reset the expectations of the entire industry. And by the way, guys, I felt you both did a really excellent job to try and get the story from the earnings statement, because that's all you had to go on at the time. It was that supply was tight and it's going to be tight for a long time. And clearly higher prices is what moved the needle for Micron, not necessarily selling more units. And that's exactly how the call played out. So the big wow number was that in the fiscal fourth quarter of the current period, Micron saw $51 billion of sales. And it highly relates to data center and high bandwidth memory. And the street was seeing maybe 43. But the bigger picture is that's the best position for Micron to be in, where there's very tight supply, they have pricing power, and everyone wants the thing you're selling. Compare and contrast, it's not good for the companies who are in the market that are trying to get hold of those chips.
I just want to know, I'm leaving 731 because love the praise. I feel like I've done it when Ed Ludlow says we did a great job on a complicated company like Micron. I'm done.
I thought we were going to talk about soccer, but that's okay.
No, I'm good. I'm good. Love you, as always. And you also helping us always make sense of all of these reports. Ed Ludlow, thank you so much. Be well.
Sure.
Ed Ludlow, he's the host of Bloomberg Tech. Check it out on Bloomberg TV, 11 a.m. to noon, Monday through Friday. All right, we're going to stay on AI.
And why the challenge for investors is not only understanding that AI is consequential, but building frameworks precise enough to act on. So says Jitanya Kandhari, Deputy CIO Solutions and Multi-Asset over at Morgan Stanley Investment Management. She joins us here in the studio. What is the right way to build a framework?
Yeah, so, I've written about 10 investment truths, what's really happening with the algorithmic compute capacity, how this is becoming a tokenized economy, how we are moving from, a reactive to a proactive system, what works in the software space, etc. So I think AI has become a full stack capital cycle, right? So if I look at it as 3 layers, there's the infrastructure layer, which is all the chips, the power, the transformers, the cooling equipment, the server, the packaging, the silicon photonics, name it. Then you have the models layer, right, which is the proliferation of models, the LLMs, that I think that's getting a little commoditized eventually. And then the application, which is both on the agentic side, software, and the physical side, which is autonomy. So I think thinking through these layers, how they connect, and where scarcity is becoming opportunity is the way to kind of build portfolios in the global space.
So how would you do you build for the next 6 months or 12 months because things are changing? And I love that you went there because we've had conversations about those with, the large language models that, like you said, it's going to be commoditized and there may be some winners and losers or certain ones used for certain things. So how would you position a portfolio right now to take advantage of the AI narrative? And again, do we need to think in 6-month, 12-month increments right now?
So I think the infrastructure layer, which was historically a cyclical story, right, with the chips and memory and photonics, cooling equipment, that has about a 8-quarter visibility from our meetings with some of the management companies. So I think we're feeling good about that traction.
So from here, another 2 years?
Yes.
Okay.
At least till the end of next year.
Okay.
I think there is a big dislocation between hardware and software. So if you look at the, in all country world, the software has really undershot. And I think the 3 things, data, domain expertise, and distribution, will work for some software companies, for example, in the cyberspace and the enterprise space. So markets really not paying any attention to that. They're getting decimated, so we're building that. And we love pockets of the physical world, because when you start buying robotics and drones, you really don't want to buy the companies actually making the robots, but you want to buy the supply chain of those robots.
What if you're not in tech? Or nobody's not in tech, but what if you're not all in on tech? I mean, are you making the argument that the only areas of growth for the market are in technology right now? Should investors get rid of everything else in their portfolio?
No, which is why I started saying that AI is a full stack capital cycle. So there are industrials, of course, we know the power side, there's transformers that are in deficit.
But all related to AI.
Yes, I think the market cap, it's blurring, right? Just like the internet with time, what is internet and what is not became hazy. I think it's all blurring. So we do play the markets with anti-correlated sources of alpha. So we do have, of course, this big exposure to hardware, software.
Do you want to be buying the chip makers? Do you want to buy Micron? Do you want to buy Qualcomm? Do you want to buy these names? Because that is certainly, right, a big part of the infrastructure.
Yeah, I think.
Or are you thinking differently?
With taking it a step further into the newer areas of AI, which is, say, physical AI, as I mentioned.
So you mean you're talking about the robotics and that's...
Yeah, so there are actuators and sensors. So I think we've held a lot of these companies and the chips, but we're kind of migrating to adding more exposure in the next capital cycle, which is coming in the physical world.
You mentioned that cybersecurity is an area of software that is still attractive. We had the same conversation yesterday and the day before, because everyone's trying to figure out what the actual effect of AI will be on the software names that have just gotten so hammered over the last few months. Has that been warranted for those software names?
No, the joke is earlier, the world said that software will eat the world, and now it's like AI will eat software. I don't agree.
The famous Mark Andreessen 2011 essay, software will eat the world. Now AI is eating software.
I think it's overdone. I don't think you can paint the software sector with the same brush, because I think there are companies that used to just build code, and those are gone, right? Because you can do all of that with the models. I think on companies that have, I said, the data, the domain expertise, the compliance understanding, the distribution are integrated in the workflow, whether it's in the enterprise side, in cyber, in industrial software, in healthcare software. We're trying to buy the leaders in those respective vertical domains.
How much time, Titania, do you guys at your firm at Morgan Stanley, which is known for having kind of a foundation when it comes to technology, right? If you go back to the dot-com era and just in general, in terms of IPOs and so on and so forth. But I'm just curious, how much of your conversations when it comes to the market environment in general are you guys talking about AI? Is it 90%, 80%?
A lot
100%?
of time. One is, of course, how we investing is, because a bigger and bigger part of the market cap is, as you said, AI linked, and also how are we using it? So how are we really creating those efficiencies within our research process, within our costs, within the overall ecosystem to kind of really enhance the power of AI.
Right, and figure out the ROI. I'm assuming that that's becoming a bigger part of the conversation too.
Right. I mean, I was interestingly in Europe recently, and a lot of the companies were talking about that, monetization. Of course, Europe is far behind in terms of their models, but actually, you're beginning to see evidence of that.
Titania Kandhari, she is Deputy CIO, Solutions and Multi-Asset at Morgan Stanley Investment Management. Thank you. Perfect conversation on this day. Check out your 401k, everyone. You may very likely be invested in these BlackRock funds. We'll explain.
2:21 on Wall Street. I'm Amy Morris. The Wall Street Journal quoting two U.S. officials saying that Iran attacked a Singapore-flagged ship in the Strait of Hormuz. That's got oil moving higher. WTI now up more than 2%, right around $72 a barrel. Brent crude topping $75 a barrel. That's about 1.75% higher. And a tech sell-off weighing on Wall Street as we check those markets. We do it for you all day long at Bloomberg. S&P 500 is up 0.2%. NASDAQ down 0.25%. The Dow up 0.4%. The 10-year Treasury yield at 4.39% and the 2-year yield at 4.11%. Micron Technology shares are 17% higher after the memory chip maker gave a stronger outlook than expected. Analysts are positive about increasing AI demand and highlight the strength in the company's expanding margins. Apple raising prices of Macs, iPads, and home devices to offset cost hikes caused by a shortage of memory chips and storage. An Apple spokesman says the company has never seen a component price increase this much this quickly because of the rapid expansion of AI data centers, which is creating a surge in demand for memory and storage. Apple shares are 4.5% lower. A Supreme Court ruling has shielded Bayer from tens of thousands of claims that its Roundup herbicide should have been labeled as a cancer risk. Bayer shares are 19% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Bloomberg Businessweek Daily now with Carol Masser and Tim Stenovec.
We got it, Amy. Thank you so much. Amy Morris in for Charlie Pellet. Hey, American workplace savers are more confident about retirement, but many may still be falling short of the savings that they need to achieve the retirement they want. I'm always like finding things on social and Instagram, like, do you have what you need? This statement is according to BlackRock's 2026 Read on Retirement report. They've done it for a few years. Let's get more on it with Nick Nafusi. He is Global Head of Retirement Solutions and Head of LifePath over at BlackRock. He joins us here in studio. He oversees, by the way, $700 billion in target date fund assets globally. Full disclosure, they're a part of the 401k plan.
Yes, some of those are our assets, so full disclosure.
Well, it's funny, on our planning call, we were like, how much is in them? Because it seems like they are part of so many different 401k plans. Can you just give us some size and scope, like how much they've grown over the last few years and how much money continues to come in?
Sure. So going back 10 years now, when I joined the team, I think we were at about $150 billion, and we're now over $700 billion. And what you're seeing is this trend moving to defined contribution. So more money is coming into defined contribution. This is how Americans are going to retire. Mm-hmm. So the demand is higher. Corporates are now engaging more. So think of auto enrollment, company matches. So it's driving a significant amount of flow into target date funds, LifePath specifically.
In a sense, though, I would imagine it's gotten a little more complicated. Also, we chatted about this on our planning call. The fact that, I'll never forget my first job. It was like, throw the 401k into the target date retirement fund, and then you just forget about it. And the asset mix changes as you get closer and closer to retirement. But then, over the last 12, 15 years, equities have just been on fire. Yeah. And had you overinvested or had been overexposed to bonds, you've really missed out. I'm curious how you think differently about the asset mix as people get closer to retirement versus maybe 10 or 15 years ago. Has that changed?
Definitely it's changed. The change in thinking we have is around what we describe as personal pensions. So what we've done very well with the industry, and this is exactly what you've seen, is that we've gotten people into the plans better. So this is auto enrollment. Auto escalation means that we're going to increase the savings rate over time. You have corporate matches, and they're invested in target date funds. These are professionally managed, diversified portfolios. It takes the guesswork out of it. So you do have lots of equities when you're young. The products that we oversee is 99% equities for young investors. You have a very long time horizon to compound. What we're seeing now, though, is that people that are approaching retirement need something more than stock and bond portfolios. And this is where personal pensions come in. So think of the DB plans. DB plans had a wider source of assets to choose from, whether it's private markets, different types of active management, and importantly, guaranteed income. That's the change that we're starting to see. So strategies we have like LifePath Paycheck, this is going to embed guaranteed income into the portfolio so somebody has an option of taking guaranteed income in retirement. If you give an individual money, large lump sum of money, and say, hey, you've got a large asset balance at 65, good luck. That's what we're doing right now in the industry. We've professionalized accumulation, but we need to take that money and show them how to convert it into spending in retirement.
Nothing's a given, though, and nothing's guaranteed. And we have certainly, if you think about the last, go back to the great financial crisis, like we have seen things in our lifetime where markets really come undone. And, all of us who were around during the GFC, I just remember thinking, okay, our financial system's going down. And there was a lot of moves to make sure that it did not. And that's the gold standard. We had COVID, the shutdown of the economy. Now, listen, we've bounced back tremendously. But how do you guys factor, like I said, nothing's a guarantee. So how do you figure that out?
Diversification. Simplest answer is, so this is where the bonds have come in. Bonds did very well during that time period. You're actually seeing a change now. This is one of the keys that we talk quite a bit about. Bonds have evolved to where they're not providing the level of diversification in the last couple of years that we've seen really since the 1980s, the early 1980s. They've not offered the same level of portfolio protection to equities. So we all owned fixed income because they offset your equity volatility. We're getting a lot more demand now across our book for alternatives. And this is where we talk about guaranteed income, private markets. And one thing we don't talk enough about are things like liquid alternatives. These are liquid funds.
Not everybody thinks alternatives in a retirement portfolio are a good idea, especially in the context of the challenges that we've seen in the private credit world of late. We've even had folks sitting right where you are saying it's a terrible idea to include this in retirement. These are products meant for sophisticated investors who understand what they're buying. And there's the concern that the stuff that will end up as an option isn't the best stuff. How would you respond to that?
There's a couple of parts. First of all, it's the structuring is the issue. It's not the access point. You can access private markets specifically in 401k plans today, but it's about how do you structure them. So
anyone can do it, or just accredited investors?
There's some stipulations of how it works, whether it's in the core menu or whether it's in the brokerage window. What we're talking about, though, is within the target date fund, where we are professional investors. We are BlackRock. We have Aladdin tools. We have the tools to build the right structures. What we've looked at, though, is leveling the playing field between what's offered in defined benefit plans and in target date funds. So defined benefit plans are running about 20% private markets today. Now, we're not.
This is a traditional pension for the few people who still have traditional pensions. Okay.
So they have those assets. So if you're in a pension plan, you have probably 20% of your portfolio in private markets. These are sophisticated portfolios. What we're advocating for is we want to be able to access those same investments. Now, we're not going to go from 0 to 20% overnight, but we need to expand the horizon of what we can do. Really, to your question about how do we evolve these portfolios differently, and this is the idea, again, of a personal pension. How do we take those vehicles, put them into a target date fund? But this is the most important point, and I think this is missed. We have a benchmark. We have to manage to a benchmark. It's not a gross of fee benchmark. It's a net of fee benchmark that we have to hit. So we can't just bolt on private markets and hope things work out. It has to be about the outcome. And that's the change that you've seen in the markets now. We're much more focused on what is the outcome. And the outcome is getting to be more, how do I have certainty in retirement?
I mean, if it doesn't work, people aren't going to put money in there.
Absolutely.
Essentially, right? It's as simple as that. What is the retirement scene?
The good, the bad, and the ugly?
That people being confident about it, but not really being ready for it. Like, what is that point?
So the point we're making is the confidence is quite high. It's one of the highest we've seen in confidence. One of the reasons for this is markets are going up. So when markets are going up, and people's confidence is going to be directly linked to their account balance. So if I look at my account balance, if it's higher today than when I looked at it last time, my confidence is probably higher.
Guilty as charged. Anyway,
that's why you just never look. That's the trick.
There are times I don't look.
But the hope is with the target date fund, with professional management, we will rebalance this. We will adjust the portfolios. So if there is a drawdown, we can make changes. But the question about the retirement readiness, what we're really charting there is what's the gap between being confident today, but being able to have enough money to have certainty in retirement. And that's the gap that we're seeing. It's not a huge gap, but it does exist. And we want to just continue to encourage people to save more money if they can. But importantly, go ahead, sorry.
No, finish, please.
We want your money to work harder for you. And this is where we start talking about alternative investments. This is where we talk about guaranteed income. There's things that we can do to make these products more efficient. We've learned all this from the traditional pension plans. We want to be able to incorporate those in, because telling somebody they need to save 5% more is not always, it's not always a good conversation.
What I wanted to ask you, and I think I was looking at some retirement stuff, is that increasingly, you're going to need to think about your healthcare coverage, right? Sure, there's government and so on, but it can be a nightmare. Are you increasingly thinking about that in terms of what a person's going to need in retirement? Like, how does that factor in?
We refer to this phase as the retirement window. It's between the age of about 55 and 70, and this is when it really gets stressful for individuals. The numbers are pretty challenging. So about 2/3 of Americans say they want to work longer, and only about 1/3 of them end up working longer. When you dig into why, it's because their health, their spouse's health, or they lose their job. So that window, that 15-year window, is critical to understanding what choices do they have. How do we think about Social Security? How do we think about guaranteed income? We've got to be able to position them in a way where they will have enough money in retirement, and what they're really looking for is that certainty.
So it's all of it.
How active are people, especially in times of volatility in markets, when it comes to the portfolios that they should, essentially all experts say, never touch it, don't change the allocation, set it and forget it, and just check on it every quarter?
The recent data shows that people are not particularly active in target date funds.
That's a good thing.
It is a good thing.
Because we get in our own way as humans.
Right.
Almost every study that we look at shows people in target date funds in general do better than people in the core menu, which is when they decide to do it themselves. The target date funds do the things that we know we're supposed to do. Diversification, asset allocation, rebalancing, that's what a target date fund does. Now, the one point that I would caution on, though, is that we've not seen a prolonged drawdown in the market for 16 or 17 years. And to me, it wasn't 08 that makes me nervous. It was we had 2000 to 2002, and then 7 years later, we hit 08.
I'm just going to, if you have the Bloomberg terminal, just go look at the chart of the NASDAQ during that time, the S&P 500 during that time. There were a lot of years where things just went sideways.
Yeah.
Well, do you feel like this AI era could be similar to that?
This is a much longer conversation than just whether the AI era is similar to that. It is. I think it is very different than that. I think what AI is doing is very different for a lot of different reasons. There's layers to the AI story. What is also different now is that we're investing differently today than we were 20 some years ago. So I started investing with my dad in the late 90s, buying IPOs on a payphone from my high school. So thinking about that versus teaching my sons about target date funds and talking about Trump accounts, we've gotten to this diversification point. We've gotten to a point about people actually own bonds now. They own alternatives. So I think it's a different investment market.
Okay.
It is more diversified.
It's also a market where people have to be in to plan for their retirement.
We only have 30 seconds left, but you mentioned Trump accounts. How does that fit into the retirement picture?
It's an access point. So it's about rewiring the entire retirement system. Trump accounts simply do what we all know is save earlier and let your money compound for longer. So if you can give somebody that is just born, somebody 5-10 years old, more time to compound, you know the math as well as I do, that extra time of compounding is important. And I think the more Americans that invest in capital markets, American capital markets, the better we're going to become.
You have to come back because there's a lot more I'd love to talk to you. Because we do think about the need for individuals to take care of their own retirement because you're not going to have companies doing it. It creates this automatic demand for investments. And I don't know whether that's a good investment loop or whether that creates... Anyway, will you come back?
Absolutely.
All right, we would love it. We got to run Nick Nafusi. He is Global Head of Retirement Solutions, Head of LifePath over at BlackRock, that is, overseeing about $700 billion in target date fund assets globally. Thank you. Come back soon.
Thank you.
Yeah.
When we come back, the World Cup in full swing. That is why my son is staying up so late.
I believe it's
every night.
Full
Football.
swing or kick.
Yeah, JT Batson stopping by from the U.S. Soccer Federation.
It's 2:40 on Wall Street. I'm Amy Morris. News that ships have been turned back by Iran at the Strait of Hormuz is now boosting oil prices. Maritime intelligence company Windward says Iranian authorities ordered at least 3 oil tankers transiting the strait to turn back. The Wall Street Journal quotes 2 U.S. officials saying that Iran attacked a Singapore flagship in the strait. That's got oil prices higher. WTI crude oil now up 2.4%, around $72 a barrel. Brent crude up 2.2%, topping $75 a barrel. A sell-off in mega caps overshadowing gains on Wall Street. We check those markets for you all day long at Bloomberg. The S&P 500 up 0.2%. NASDAQ down 0.25%. The Dow up 0.3%. The 10-year Treasury yield at 4.39% and the 2-year yield at 4.12%. U.S. consumer spending accelerated in May, even as prices rose at the fastest pace in more than 3 years, suggesting Americans may be powering through the fallout from the war. The The Fed's preferred measure of inflation, the PCE price index, rose 4.1% last month from a year ago. Excluding food and energy, those prices were up 3.4%. And a separate report shows the U.S. economy grew by 2.1% in the first quarter, faster than previously estimated. Weekly jobless claims fell 12,000 last week to 215,000. It's another sign of a stable job market. That has traders pulling back expectations for rate hikes at least a little bit. Traders are still pricing a quarter-point increase by the October meeting. They've reduced bets on a second hike in the first part of next year. The Supreme Court has sided with Bayer, the maker of Roundup weed killer, blocking thousands of lawsuits alleging it failed to warn users that the product could cause cancer. Bayer shares jumped 19%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek.
All right, Amy, thanks so much. Hey, folks, not sure if you noticed, man, so much going on, but we are already 2 weeks in to this day when it comes to the World Cup, playing across the U.S., Canada, and Mexico.
This is why you're so tired. You were up late watching Mexico last night. When?
I wasn't.
In Mexico City. That game, it was supposed to start at 8. It didn't start till 9.
He's not such a big sports guy. Were you watching?
Well, my son has to go to bed at 8:30. That's like the rule.
Okay.
And so I thought he could watch a little bit of it, but he was able to watch a little bit of the game before. So
all right.
A little bit of Brazil.
Let's talk about what's going on, because the Odd Lots podcast, they're doing something, and I was reading and they pointed out that the last time the World Cup came to the U.S. was back in 1994. Before then, the World Cup was an enormously popular event with surprisingly limited commercial significance. Fast forward, it is massive with a global audience and reaching, I got to say, it's one of the really world's most watched global sports events. So leading the way forward with us is JT Batson. He's been CEO and Secretary General of the U.S. Soccer Federation since September of 2022. He joins us from Los Angeles. JT, great to have you here. And then also with us is our own Randall Williams. He's Bloomberg News senior reporter, co-host of the Business of Sports podcast. He's here in our New York studio. Great to have you here. You've been tracking all the games in and out. I'm going to let you ask the first question of JT, because you've been watching all of this stuff.
I mean, let's start off pretty basic. JT, how happy are you right now?
Definitely happy. And based on everyone I keep running into here in LA and my travels around the country, lots and lots of happy people here, and they're excited for the run we're on.
Are you surprised at how well it's going? You know that there were a lot of stories leading up to it about cost and access, and everybody here in the New York Metro was like, it's going to be a nightmare, and it is a little tough moving around, but it just seems to be going well, and everybody who's at the games are just having a blast.
Well, the U.S. is a soccer country. There are well more than 100 million people in America who are fans of soccer. And of course, we have such a diverse country with people from all over the world. So every team was going to feel welcome here. Everyone is going to have an amazing time. And people are now seeing that all around the world. It's pretty cool walking around the streets of New York. You see Argentina jerseys on a day that Argentina is playing. You see Brazil jerseys all over. Even here at the office, I sometimes am seeing jerseys this week. No question, World Cup fever is hitting here. In the streets of Brooklyn over the weekend, they were selling all the jerseys that were available for these countries around the world. They were out of U.S. jerseys in every size. And I think that really speaks to the enthusiasm that we're seeing right now, especially among kids. How do you translate that enthusiasm into something sustainable for the U.S.?
Well, a couple of things. One is you're right around the incredible demand for the U.S. jerseys. They're iconic. They're a ton of fun. And even though Nike produced way more than they ever have before, they have been, hot items all across the country. And so it doesn't surprise me to hear about that in Brooklyn. And I think, more broadly, we view the opportunity we have now, this World Cup, the LA Olympics, and hopefully the Women's World Cup in 2031, to have a similar impact on the growth of this sport as we did 94, the Atlanta Olympics in 96, and then the Women's World Cup in 99. And if you think about what soccer was like in 94 relative to where we are now, imagine what it could look like in the future with all this excitement. And we're excited about using this as a way of getting more soccer in schools, getting soccer in more communities across the country, getting more commercial investment in our sport, getting more government and philanthropic investment in our sport. And so lots of exciting progress. And we know that the best days for soccer in this country are ahead.
I should clarify, I don't know if the woman selling them, they said Nike on them, Randall. I don't know if they were official Nike gear. I just want to clarify.
Yeah, that's a good clarification point. I do wonder for you, JT, What do you think the real impact of this World Cup is on U.S. soccer in comparison to previous World Cups? Of course, we had Qatar and South Africa and so many other ones that created incredible memories. But for you being here in the States, seeing, the fans sing along in the arenas after, in the stadiums after the U.S. has won, what do you think the real impact of this World Cup is going to be on U.S. soccer?
Well, I think for us, we've always viewed this as an opportunity for for Americans to fall in love with this team. And I think they've done that, and folks are excited. Being in the Seattle Stadium when everyone was singing Country Roads was pretty special. And I think, the sort of collective energy of that and the 15,000 people who all marched together to the game, just the pride, the passion has been awesome. And then I think more broadly, we've always viewed this summer as an opportunity, in the World Cup being here, as an opportunity to get organizations, communities, individuals to take the big steps forward to propel soccer in this country. So as an example, before our first game in LA, we announced with LA Unified School District that they're committing to put soccer in every school. So that's 400,000 kids who now are going to have access to soccer. And we're working with communities all across the country to do that, with our goal of by 2032, every school in America having soccer. And so it's those sort of movements, it's those sort of actions that we believe are going to propel soccer forward for generations and generations to come.
Now, JT, I could congratulate you on U.S. soccer's 2 wins here, but I could also congratulate you on your contract extension. And I wonder, you being locked down long term for U.S. soccer, what is your vision beyond the World Cup to make sure that this momentum, this excitement around the game of football and soccer here in the U.S. continues?
So at U.S. Soccer, we view our role as being in service to soccer. We think our role is to support those who are bringing soccer to life in communities all across the country. And we have 3 generational ambitions we're focused on. U.S. soccer success, so we want our teams to win World Cups. We want U.S. soccer to be everywhere. We want soccer to be the #1 played sport in every community. And we want U.S. soccer to be yours. We want everyone who cares about our sport to feel connected to U.S. soccer and to our sport. And we're just getting started. There's a lot of work to do to bring those to life at the scale that match the ambition of our fans and everyone who cares about us. And so I'm excited to be doing this for the long haul, and looking forward to many years of great progress ahead.
JT, 30 seconds. When do you want to see the World Cup hosted here again?
Love it always to be here. Of course, we've got the bid in.
It's just not the way it works, unfortunately.
We've got the Women's World Cup bid in for 2031. That's going to be spectacular. It'll be the first time 48 teams will be in a Women's World Cup. We will set a new standard for what all of that can look like, and it'll be a ton of fun.
So maybe in 2 years? 3 years? No, I'm just kidding.
We got the Olympics back in LA in 28.
Right.
So
okay.
So we want to win medals on the men's and women's side there. So we'll keep the party rolling.
Listen, this was really fun. Good luck and congratulations on the event. Certainly has a lot of folks here in Bloomberg and really around the New York metro area really excited about these games. JT Batson, CEO and Secretary General of the U.S. Soccer Federation, and of course, our sports expert. One of them here. Unbelievable. Randall Williams, Bloomberg News senior reporter and co-host of the Business of Sports podcast. Highly recommend. He's done some reporting, Blue Owl, in advanced talks for a stake in the Cleveland Cavaliers. So check it out on the Bloomberg.
Yeah, the size of that stake expected to be between 5% and 10%, with Sportico valuing the team at $4.86 billion. Check out Randall's story for more exclusive details on Blue Owl being in advanced talks for a stake in the Cleveland Cavaliers.
All right, when we come back, a check on the trade and stocks on the move. You are listening and watching Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, woohoo, everybody. We are getting close to the last hour of trade on this Thursday. Interesting day, definitely off our best session highs, or our highs of the session. Let's try that again. But we're also off our lows of the session. But what does it mean? Just slightly higher on the S&P 500, up about 11 points. So that's a gain of about 0.1 of a percentage point. You've got the NASDAQ 100. It is moving ahead by 271 points, up 0.9 of a percent. But that average, too, was a lot higher earlier in the session. But A lot of it has to do with semiconductors. We've talked about Micron, we've talked about Qualcomm. We've definitely seen the semiconductor space outperform here.
We have, but there's also underperformance, and that has to do with the Mag 7, where every name in the Mag 7 is lower today.
Is it really?
Yeah.
Wow.
Yeah.
Or are they?
I'm not gonna take Jess's thunder because she's gonna be talking about the most important one.
Wait.
I hope she's gonna be talking about. I know she is.
Ooh, no pressure.
I know she is. She would never not lead with this one.
I'm Carol Massar, along with Tim Stanovic. Let's get to some stocks on the move on this Thursday. Jess Menton is Bloomberg News deputy team leader and senior reporter here in our New York studio. So, yeah, let's talk about the trade. And you do have one of the Mag 7 that we're going to start with.
And
Apple.
to Tim's point, because I was going to mention using MOV for the Mag 7 index. So, of course, it is Apple down close to 5%. It had been almost down as much as 7% earlier, but still on pace for its worst day since February 12th. So, unfortunately, this came on the back of those reports. Of course, Mark Gurman from Bloomberg News putting out about the price increases for a number of its products. If you're looking at its iPad, its Mac, home devices, the Vision Pro, we haven't seen those price increases just yet for, say, the iPhone or iPods just yet, but potentially he was saying that could be coming. So people watching that. So if you're looking at what happened this morning, because NASDAQ 100 futures were up more than 2%, but then once this came back, you saw Apple, a lot of those hardware type companies, and of course, the majority of those Mag 7 stocks all lower at this point. But you're seeing kind of the opposite effect when it comes to memory and chip stocks. They're benefiting from that because the whole reason Apple did this was because of that shortage when it comes to memory chips.
But you know what's so interesting? And when Tim Cook gave that interview to the Wall Street Journal a week ago, we were actually, you and I were flying to a remote. Apple shares surged because of the pricing power that many analysts thought Apple had. We're going to talk with Mark a little later in our program about this specific story and the products that it does affect. But if investors think that Apple has pricing power, then raising prices should be a boon and it shouldn't actually destroy demand.
And typically Apple's one of those stocks where even on massive big sell-off days, sometimes you see that stock either flat or marginally higher just because of the cash reserves and the amount of buybacks that company still has. So obviously it's not a complete knock on the company, but when it comes to those price pressures and the whole macro inflation story that we constantly talk about, you're obviously seeing that stock giving up those gains today. But of course, chip and those memory stocks are the ones that are going to benefit from that shortage that we've seen.
That's called a perfect segue.
I was hoping you'd say that.
To one of those companies that supplies stuff in the supply chain. Go to SanDisk,
yes.
if you will.
So SanDisk, of course, the best NASDAQ 100 gainer, among the top gainers for the S&P 500 as well. So the ticker is SNDK, up 20% on pace for its best day since January 6th. So, of course, the insatiable demand for that AI infrastructure, that's why you're seeing this stock higher. But not just that, I can't fail to mention what happened with Micron Technology's earnings results after the bell yesterday. MU's the ticker symbol for Micron. If you're looking at that stock, up 17% on pace to close at a fresh record. So blockbuster earnings reports. Citi was actually talking about SanDisk specifically because of the story with not just Micron, but the tight supply. They still feel like SanDisk, in addition to Micron, will benefit from that. And so they ended up raising its price target to $2,500. It had been $2,025 before. So they still see that as a winner in addition to Micron Technology.
Yeah, I mean, gosh, you gotta look at like all the related, right? And also supply chain, something we talked about earlier.
It's interesting though, because other chip stocks, if you're looking at ARM, Marvell, not doing quite as well in the memory space, or NVIDIA, that stock is still marginally lower today. So it's really more not chips broadly, but memory stocks that are the ones that were doing well. Yeah, which is why we kind of have a choppy market today.
Well, it's also then the conversation when it comes to AI, like, you know, shifting once again. All right, let's get to strategy.
Yes, MSTR is the ticker on this, down close to 8%. So even though it'd be on pace for its worst day just since Wednesday, if you look on a monthly basis, this stock's down more than 45%. So formerly known as MicroStrategy, but that would be its worst month since 2002, just because there has been a number of pressure. And Tim talks about this on the crypto show, but obviously this is tied to Bitcoin and the bear market that Bitcoin has been on. This is a big supplier when it comes to that. And there's concerns among strategists as far as the dividend payments Strategy is going to have. There were some senior notes that basically they had to fund, and there's concerns about will they make those types of payments. And so in addition to that supplier, what's happening with Bitcoin, almost as low as 58,000 today. That's why you're seeing this stock, as well as Coinbase, Marathon Digital, other stocks tied to the crypto space, down a lot. But that monthly size and scope looks very painful. I mean, that's over 2 decades for a monthly basis for that stock.
Yeah, shares of strategy down at the lowest, going back to February 26th of 2024. So that level's not seen in 2 years, giving up all those gains seen during this Trump administration.
Pretty significant. All right, Jess, thank you so much. Jess Matton, she's Bloomberg News Deputy Team Leader and Senior Reporter. Check out our Stock Movers podcast, 5-minute episodes, big winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.